Welcome to the Loveland Important Loan Arranger Show. I am Cleve, Loveland, Central Florida's best real estate planner, alongside the loan arranger, Bruce Woodburn. And we're talking mortgages. We're talking real estate news. What's going on out there as we are in the trenches selling homes and giving mortgages. Bruce, I saw your safe looks empty. January been busy?
January has been
I didn't see those stacks of cash in there. I saw a bunch of silver briefcases.
Like crazy. I will tell you, all kidding aside, I have seen a tremendous, probably about a 50% increase in new business come in just in January. So that is huge. So I'm staffing up. I'm looking for new loan officers. If you're a loan officer, you have at least 3 years experience as a loan officer in the trenches. You call me. I'm always looking for talent. Now, I'm picky about who comes to work for me. I will be honest with you. So I need good work ethic, and I need honesty, integrity. And if you speak Spanish, that's even better.
All right. I want to talk this show. I want to cover a couple things, Bruce. Negotiating offers when you're a seller, negotiating offers when you're the buyer.
Yes.
What's the right price? What to ask for? Things like that. And then for investors, I want to talk about 1031 exchanges today.
Okay, let's do it. Well, I want to talk about self-employed people for your bank statement program, because taxes are going to be due and they're going to be painful. So you want to write off as much as you can, and you're self-employed, call me about my bank statement program. I also have found a surge of investors right now. I don't know why investors are so doggone hot, but I'm doing DSCRs. Like, I would bet you 20% of my production right now is investors on DSCRs. 20% is very huge
simple. Now,
number.
for people that don't know, let them know. I've got one of my investors using that.
DSCR is debt service coverage ratio. And all it means, this is only for investment property. This is not for buying a primary residence. A DSCR means the only income that I need to provide for you is the income that the property is going to produce. Meaning that if you buy a property, $500,000, you say you're putting 25% down, 20% down as an investor, the rent that property produces must be at least or greater than the mortgage payment itself. So as long as that payment comes in okay, you're good to go. And it is simple. And I can get interest rates down to where they're as low as a conventional investment transaction. Very attractive program.
Now, you got to have 20 or 25% down.
So the more you put down, the better the rates get.
But at least 20.
At least 20, because all investment properties are 20% or more. Okay. So I like 25% on that.
And you're going to about cash flow on something like that,
well,
right?
Here's what else you can do. See, did you know on a conventional investment loan that the seller is only permitted to pay 2% towards their closing costs?
Yes, you've taught me that.
That is not very much money. That barely covers your intangible taxes and your appraisal. It's not going to cover that much. On a DSCR,
they can pay it to 6%.
6%.
Yep.
So I'm having investors go in with their down payment only, and the seller's picking up all their closing costs. We're getting 4, 5, 6% paid in closing costs. We're buying that rate down so that investor doesn't even have to refinance in the future.
Yep.
And that's strategic planning. If that's something you'd like to investigate, call the loan arranger. I can help you structure it. We'll get you fully approved so you can negotiate it. We can use my fast track program, which puts you in a position like a cash buyer. Call the loan arranger, 407-250-9144, or WeBringYouHome.com.
I want to dive into negotiations, Bruce.
Let's do it.
And this is what you're hiring. This is what most realtors are hired for, because sellers aren't comfortable doing it, is the negotiations. Because, what's funny is I got a house listed for 500, and it's getting good activity. It's priced right. It's going to sell it's going to sell 97, 98% of list price, 99% maybe.
Yep.
And I'll get an offer for 400. And I guarantee this is little Susie, the hobbyist that hasn't sold any homes yet, or the ink on her license is still wet. And what I do is, now, of course, my seller's, what? No, don't even talk to him. And I'm like, let's give them 2 choices on a counteroffer. I like to give them a couple choices, saying it's this price if you close here, it's this price if you give us a week post occupancy, it's this price if you don't want the washer dryer and the home warranty. I give them a bunch of choices, but I'll also send little Susie the comps that I use to price the home.
Sure.
And then call her and have a conversation like, did you ask? I mean, did you check what else is selling in the neighborhood? All the other homes are selling 490 to 520. Why? Where'd the 400 number come from? Oh, I'm representing the buyer, and that's what the buyer said. That's what the buyer said they want to do. I said, this is where the neighborhood's at. There's no reason they would let it go for that. So if this is what you want, if they want the home, give them, I'm like, chop the header off my email, give them all these points. And that's
Right.
what I do. And that's most of what I have to do, because in the past 15 years, Real Estate 101 is gone, Bruce. And they're virtual brokerages. There may be training webinars, but these agents don't watch them.
And most sellers aren't desperate, right? They're
No,
not
they're not.
desperate.
Not to do that. No.
Very rarely do we run across a situation. It does happen that somebody's, I have to move. It's divorce. I got to get my husband paid off or my wife paid off. And by God, I'll fire sale the house. Okay. Just get me an offer. But that's a rare occasion. Most people are not going to be willing to knock $100,000 off of a $500,000.
And this is the way I look at something. If it's going to, why would I go less than 2 or 3% of the list price when I can just adjust the listing price and get more people through?
Sure.
If we are in the wrong position, like if we are a little bit too high and they're getting homes that have a 3-car garage instead of a 2-car garage around our price, I can look at that, and I go over that with my sellers every month or so. So like I've got one, when I get these offers from these untrained agents, that's a buyer, and I'll see their pre-qual letter.
Untrained agents.
They're good to 600. And I'm like, and I'll even figure the payment for them and say, hey, that's a $500,000 house. Looks like they're putting down 10%. That's a $3,500 payment. And they're like, how'd you figure out the payment? I'm like, I got an app on my phone.
Yeah.
And so they're like, and I said, why are we arguing over a $3,500 payment when they're qualified to a $4,000 payment? And they don't, they're like, huh, okay, let me talk to them. And so
speaking
I will keep the deal
these
going.
Agents, I know that you're looking for talent right now too.
I am looking for experienced agents.
Full-time.
Full-time. This is not a hobby.
Right.
We take it very serious. I run a business, not a real estate office.
Right. And
real estate is my business. But this is, and what's funny is I interview most agents, they got into real estate for freedom.
Right.
And I'm like, if you want to make money, you're going to work 6 days a week, and I'm going to know your schedule, and you're going to be a part of a team. And I am looking for that. If you know somebody, and I can even take the great salesman, a great car salesman, or a great T-Mobile salesman,
or a waiter.
Yes, somebody great in customer service. That's what we do at Loveland Property. So if you know somebody like that, have them call me.
Maybe that's you out there. Now, I'm looking for loan officers right now, but I need experienced loan officers. There's too much to train. It takes me a year to train somebody. So if you've got 3 years in the mortgage business and you're looking for a great place to hang your hat, Cross Country is the largest retail lender in the country. We have more loan programs than anyone else. Our comp plans are very attractive, and our interest rates are unbelievable. So if you're looking for that, then come see me. I even have branch opportunities. I've opened up a branch in Ohio. I've got branches throughout Central Florida here. I've got other branches that I can help you open up if you've got a team and you have ethics, but I'm looking for people with strong ethics. If that's you, call the Loan Arranger at 407-250-9144 or webringyouhome.com. Okay, so we've talked about what's going on in 2026. I think that 2026 is a turnaround year. I think that this is the year that things start to get much, much better. Now, do I think we're going to see an explosion like we did during COVID of real estate? I don't think that's going to happen. Do I think interest rates are going to drop into the 4s? I don't think that's going to happen either. I think that
people's pocketbooks are going to swell is what's going to happen.
Right now, I am watching the bond market like a hawk, and it's moving in slow increments, but it is getting better. But we have to pierce these ceilings of resistance in the bond market. The things that's going to do that are unemployment and inflation. Inflation is going to make a difference. If inflation continues to drop, you will see interest rates improve. But if you're one of those people that would like to refinance because you have a 6.5% or a 7% interest rate, and you think you're going to hold off till it hits 4.5%, you will have wasted a lot of money. Don't step over $1 to pick up a penny. If I can save you a couple $100 a month right now, then you should take advantage of that. Don't look a gift horse in the mouth. It can happen, and we can save you money. If it drops significantly for some unknown reason in the future, we can do it again.
Well, and 2 years ago, we were close to the 8s.
Yeah, we were in the 8s for a while. We were at 8.25.
Year ago, we were 7.
Yep.
Now we're high 5s, low 6s, depending on what's going on. And we're hitting that wall of resistance, and we're probably going to be floating in. We're lucky to be floating in the 5s this year, later on this year. And it's not going to happen next month. But housing prices over the past 2 years, Bruce, continue to appreciate. There were some months they were flat, but let's say we just had 1 or 2% appreciation instead of 3 or 4. I really think it's going to pick up again.
I do too.
And inflation drove pricing up.
Well, all it takes is for people to jump in the market. The only
Yep.
reason houses were flat is because the buyers were flat.
One of my old customers does tax returns. He's 80, he's still working, does tax returns for Jackson Hewitt. He said they are expecting just the tax returns because of the big, beautiful bill are going to be bigger. No tax on tips, no tax on Social Security. There's going to be a lot more money in people's pocketbooks. And hopefully that flows upwards to the housing investment, not to the mall investment for the new Gucci bag.
I certainly hope that is the case, but there will be people that will consistently want that Gucci bag,
Yeah.
and they'll want those Nike shoes,
Yep.
and they don't have anything to show for it, but they got a nice bag and pretty shoes.
I got first-time buyer info here.
But before we go into that first-time home buyer, I want people to know that the folks that were sitting on those golden handcuffs are now moving into the market. So that will put more houses for sale on the market.
Yeah.
It's going to stimulate more buyers. And when there's more buyers in the market, what do you think is going to happen to home prices?
They're going to go up.
They're
Start
going to go
climbing
up.
again. They start climbing again.
Yep.
They will start climbing.
Let's see what you got.
But first-time buyers, the median price age 40 years old.
Isn't
Record
that-
a low amount
that
of
needs
first-time
to come
buyers.
down.
Just for first-time buyers reaches a record low. This is from National Association of Realtors. First-time buyers about 40 years old, which is high.
Way too high.
Yeah, and so
we should be in the high 20s.
Usually it's in the mid-30s on this, and this because this is averages and repeat buyers. But most of these, the down payment, half of it was from their personal savings, 401ks, people borrowing a little bit out of that, gifts and loans from family about 20%. But I just think the first-time buyer is the key. Once they start and they get one, I've never had somebody call me, Bruce, in 35 years and say, "Dang it, I wish I wouldn't have bought this house."
No.
And especially when I talk to my sellers or my buyers once each year, and I go, "Hey, that house went up from 300 to 315 this year, and your mortgage went down, and you don't have a landlord," and nobody's ever said, "I want you to buy this back from me."
No.
And it just this
Doesn't
is the
happen.
first step. And then when I talk to them, I'm talking to my buyers now about renting it, and leapfrogging is one of the best systems you came up with.
If you are in your 20s or you have children or grandchildren in your 20s, I want to strongly encourage you to help them become a homeowner. It will make a massive difference in their future. It will make a more responsible human being out of them when they're a homeowner. And they may not, you may look at them and go, "I don't think you're responsible enough to be a homeowner." Listen, all you got to do, if you're making a rent payment, you can make a mortgage payment. Let's just get their credit in line and help them become a homeowner. Because if you buy in your 20s, you have a 70% greater chance on being a millionaire when you retire. If you buy a home
In your 20s,
in your
yeah.
20s, you have a 70%. That's a pretty darn good chance you're going to become a millionaire. And it makes sense. Look at the people that you know that have money. Look at the people. We got a minute and a half. Look at the people that you know that are wealthy. Do you know any of them that are renters?
I don't know.
No, I don't know
any
any
rich
of them.
renters.
All of you that are listening, look around the room, look at your friends, look at anybody, and you look at who's got money and who doesn't have any money. And I guarantee you can tie real estate to that.
Yep.
And you might not think it was real estate that made them money, but it helps build your wealth. 407-250-9144. Call the Loan Arranger. I will help you become a homeowner one way or another. Cleve, Loveland, 407-352-8118. Again, the Bruce Woodburn, the Loan Arranger. You can go to webringyouhome.com and we get your application taken right here, right now. I got loan officers on call, ready to help you. If I don't answer, you'll get a call back. You've got my phone number. Cleve?
407-352-8118. We'll be back right after this.
Yep. Stay tuned. We'll be right back.